Hi, this is Jeffrey Kurt Financial Group. Today is Friday, August 21, 2026. So as we were doing our Wednesday video and talking about the interest rates and bond market, and also there was a quiet week and nothing going on, sure enough, the U.S. Treasury Department and Secretary of the Treasury, Scott Bessent, announces that they're going to be doubling their buyback of U.S. Treasury bonds. Now, I must admit, I didn't realize they were doing any kind of buyback of Treasury bonds, but they were at $2 billion per event or per operation, and it's going to double to $4 billion and start in September. So what's this mean? Well, the older bonds, and what they're targeting is the 10-year to 20-year sector and then the 20-year to 30-year Treasury bonds. Those bonds that were issued in past years are selling at 50 cents on the dollar, 40 cents on the dollar, because interest rates have gone up. When those were issued 3 or 4 years ago, 5 years ago, longer, interest rates were very low. Now they've gone up, and those bonds, nobody wants them because the interest rates currently are much higher, so they have to adjust the price, and those prices are down, so the Treasury is going to come in and buy them at a discount. Now, the other part of that is the federal deficit. We running record deficits, and we have to borrow more money to buy these bonds. And there's a whole debate about whether it's a good move or bad move, and I'll leave that for another time. I think the other thing that I want to touch upon is, what does this mean? Well, it means that there's a weaker dollar. The dollar has fallen as interest rates theoretically may be capped on the upside. And even I've seen some calls for the Fed to cut rates in September or at a near-term meeting. Not sure, but again, a lot of things going on, a lot of dynamics. So again, weaker dollar, that also means higher commodity prices. And gold has been very strong the last couple of days. Copper and the industrial metals are doing well as well. And agriculture might move up. And the other thing I noticed, that the cryptocurrencies have been a little bit stronger. They've been a bad place to be, but it seems like they're making a bottom. Whether that continues, I can't say, but it's something that I picked up on. So I think in summary, there's going to be a change of leadership if the market continues to go up. This could be, again, unforeseen ramifications, and maybe there's some negatives out there as well. But right now, the markets are adjusting to this announcement, and it seems like technology, AI, that whole growth area, a little bit underperforming, and some of the industrial and precious metal areas like that, and the commodity areas seem to be doing better. So send along any questions, comments, that'd be helpful, and let me know if I can help at all. Please like, subscribe, and share. Thanks for listening, and have a great weekend. We'll be back on Monday. Goodbye.